Hello friends, this is Raj Sastry from Raj Option Trading. Today is January 19, 2022. Let's talk about beaten down stocks with cash more than $500 million. And also we'll look at those stocks which have low valuation, positive net margin. These are the companies that are making money and these stocks can work in this environment, and also low debt stocks. So with that, let's jump in. As you see here, today we had a very rough day in the market. Look, we got major indices down here, big time. Dow Jones down 339, Nasdaq down 166, and S&P 500 also down big time, as you can see here. And we got more advanced, we got more declining stocks than advancing stocks. That's also a bad sign here. And we got Omicron fears here. It might be impacting travel. So we got to be a little careful here. And also Fed is ratcheting up the tension here. They might increase the rates and inflation is going higher. So we got to be careful here. So with that, let's jump in here. Look at Thinkorswim platform. So as you see here, we got Thinkorswim platform from TD Ameritrade. Look, we got here S&P 500. S&P 500 is coming down, as you can see here. We got a nice drop, as you see here. So we got to be careful. Right now, S&P 500 is below 100-day moving average. So this can go a little lower and touch 200 in if this continues. Generally, it's all Fed-driven market here. Feds are saying, hey, you know what, we got to increase the rates here. Stock market does not like it, so we got to be careful. Futures are opening to be a little bit higher today. That could be a positive sign, but trouble is not over. We got to be a little careful here and buy the dips and accumulate the positions slowly. And then you got Nasdaq here. Look, big downtime here, and Nasdaq is really touching 200-day moving average, as you can see here. We have to be careful. If this 200-day moving average acts as a support here, it could be good, but if it breaks down, you got to be a little careful here. And we got here Dow Jones Industrial Average. It's also broke below 100-day moving average, so we have to be careful here also. And Russell is squarely below 200-day moving average, completely in a bearish territory here. So even though there is a small increase in all these averages in the overnight market here, futures market, we got to be still careful. We are not out of the woods yet. And what we'll do now is we'll look at a bond market and see what's going on in the bond market. All right, so as you look through bond market here, let's come through here. Look, bonds selling off big time. Interest rates going higher big time. Yield is going higher. That's causing issue with the stock market. Oil going higher nicely, as you can see here. And gold is also going higher. Folks are worried about inflation and they're buying some gold. So at this time, I think it's good to stick to some good old names with a nice profit margin and go from there. So with that, what we'll do now is we look at a couple of big names here and see what's going on there. So from a big name perspective, look, we got Apple. Apple is, as you can see here, down today, $3 or so. And look, Apple is coming down nicely. Look, a big time down here. It's below its 50-day moving average, and RSI is 40. At this time, Apple is completely sold off here. Look what's going on here. Apple is trading sideways, as you can see here. At these levels, with the on the balance volume pretty steady here, even though stock is dropping. I'm a buyer in Apple here. It's a great play. I think you could buy into this weakness very slowly and build a nice position here. And look, Microsoft, it's a very strong company. They bought Activision Blizzard. They got some good ambitions in the gaming area here. At these levels, look, I'm a buyer in Microsoft at these levels. Look, stock is bouncing higher, even up today. It's up 68 cents here. It's a great buy under the leadership of Satya Nadella. This company is doing great. I'm a buyer of Microsoft at these levels. Look, on the balance volume is going higher. That tells you more buyers than sellers. And then you got Amazon.com. This one is really strange. It's been going down off late here, and on the balance volume is also down here. I would probably wait for a small uptick here before I put my money here, because it's been going down for a while. No sign of going higher, so you got to be careful here. It's a very good long-term play, but I need to see at least some proof that it's bouncing higher. So that's why I'm waiting a little bit here. And then you got Facebook or Meta. So Facebook is having some trouble here with Microsoft buying Activision Blizzard. Microsoft can also compete effectively in the metaverse. That's why Facebook is showing some trouble here. Look, on the balance volume is also lower here, but I would not count Mark Zuckerberg out yet. He has got great vision here, so I would be buying in this downturn here. RSI low at this level. I'm a buyer of Facebook here, and we look at a few more here and go from there. All right, let's look at one or two more here. So we got few more. Look, we got Google here, or Alphabet. Alphabet, as you see here, it's coming down nicely, and right now it's trying to touch its 200-day moving average. So at these levels, I'm a buyer in Alphabet. Look, it's completely sold off here, just 34 RSI. It's a great stock to buy. Look, on the balance volume is pretty steady here. That tells you can buy Google into this weakness. It's a great opportunity here. Stock is down $17, as you can see here. Then you got Netflix. This one is going down big time here. So we got to be careful. Look, on the balance volume is trying to go higher. Once in a while, Netflix gives you opportunity to buy here. You could slowly buy into Netflix at these levels. Look, it's trying to bounce today, up $5 here. I think it's a good one to slowly buy here. And then you got Nvidia. It's a big chip play, metaverse play, as many of you know, semiconductor. At this level, it's below 100-day moving average here. And on the balance volume is pretty steady here. That tells you people are buying into Nvidia at these levels. I'm a buyer of Nvidia here. And then you got here AMD, again a great buy at these levels here. Look, it's below 100-day moving average. On the balance volume is steady. I say go buy some AMD and Nvidia. Great buys. And we'll probably look at one more and go into the stock list here. So we got few more semiconductor names, as you see here. We got ASML. ASML is completely sold off, as you can see here. This rarely comes down like this. Right now it's below its 200-day moving average. And look, even on the balance volume is weak here. So I'll be slowly accumulating some ASML at these levels. Look, RSI is 34. Stock is completely sold off here. And applied material took a big hit, as you see here, big down here. And right now it's it will be touching 200-day moving average soon here. It's also a good buy. On the balance volume is steady here. You could slowly accumulate. And Micron, it went up so quickly here. I would wait for this to come little down here, then I would accumulate. Look, stock is having a nice run here. On the balance volume is going higher. RSI is 47. I would say wait for it to cool off a little more, and then you could buy some Micron. So with that, we'll jump in and look at the stock list here. So from a stock list perspective, let's look at profitable companies with the cash more than $500 million and low RSI and low valuation. So at these market conditions here, you got to go after a little bit solid companies with the cash cushion. So with that, let's jump in here. As you can see here, we got the list of stocks. Top of the list, we got BioNTech here. It's a great vaccine play, as many of you know here. Stock is not doing well. It's been coming down off late, as you can see here. Great long-term one-year profit performance here, as you can see here. So I would say you could slowly jump in and buy some BioNTech into this weakness here. Look, we got RSI, which is very low here. Stock is completely sold off. And Moderna is in the same boat, as you can see here. Moderna is also completely sold off here, and it's been down for a while now. At these levels, you could slowly jump in and buy some of these names here. And I will not go through all of these here. Look, all these companies have got nice cash cushion. Keep watching this cash here. All of these companies have got nice cash cushion here. So that's why you could buy them slowly into this weakness. And some have got more cash than others, as you can see here. And then we got a few more here. Look, I like stock like Neo here, Neo Genomics. This can work here. It's a solid company. Stock has been down for a while, as you can see here, but still has a nice 5-year performance here. The company is making money. All these companies, as you can see here, net margin positive. That tells you these companies are making money. They're not money losers. And also, as you see here, as you see here, price to sales ratio is below 15 for all these stocks here. So that's why you could slowly buy these names here. They got a low valuation for most part, with the exception of one or two which have a little bit higher price to sales ratio. For example, ON, it's got a little higher price to sales ratio. Along with, you got one more here, which is Cadence Design. I like this company. It's a great company, but a little bit higher valuation here. But otherwise, all these names work here. You could buy them slowly. I love even stocks like ELY here, Callaway Golf. It's a great play here. Look, stock is trying to go higher in one day here. It could be a good one to buy slowly. And you got a few more all great names here. You could slowly buy these companies into this weakness and go from there. And then we look at a few more. All right, so it's a continuation, as you can see here. Home builders like DR Horton, which is a great play here. You could buy this into this weakness here. They got nice cash cushion, as you can see here. And look, they got performance is negative off late, as you see here. Stock is pulling back nicely, and with the RSI 33, you could buy some of DR Horton here and go from there. And for the folks who love steel company, Nucor is a great quality brand here. They're a steel producer, and it's a great company to invest in. Stock has been stalling off late, as you can see here. It's a good one. You could buy this into this weakness here and go from there. And then you got Teradyne, one of my favorite stock. It's a great company. You could buy some Teradyne into this weakness here and invest in this. It's a good one to buy slowly and accumulate. Look, it's done great here on the long term. 5 year, it's done 485% here. It's a good one. And Accenture, as many of you know, very steady Eddie company. It's being punished here. You could buy some Accenture into this weakness. And look, RSI is 30 here, which is tells you it's sold off here. And for the folks who love 3D systems here, DDD, it's completely sold off here. This could be a long-term play. This stock has not many money for investors. Look, 5 year just 15%. If you're a long-term investor, you could buy some. Understand there will be some short-term pain here. And I love all these social media companies, especially Pinterest. You could buy some Pinterest into this weakness and go from there. So we got a few more, as you can see here. I love stocks like IIVI. It's a good one here. You could buy some IIVI into this weakness and hold it for long term here. And there are some few low price stocks here, like Flex as an example. It's a great contract manufacturer. Stock is sold off, as you can see here. And you could buy some. It could be a long-term play. As you can see here, it has just done 15% for investors in last 5 years. So don't expect breathtaking performance here. And we got few more here. As you see, we got Steel Dynamics, again a great play here. You could buy some Steel Dynamics here. It's a good one to buy slowly and go from there. And we got few more great plays. I would say, look at these companies. All these companies have got nice cushion here. They got a lot of cash on hand here, and all these companies are making money. Look at the net margin here. These companies are not money losers. These are making money. So that's why you should go after the better companies during these tough times here. They typically hold up nicely and emerge out of this weakness pretty strong. So with that, thank you very much. Happy investing and trading. Please subscribe.